level of capital requirements that exist right now are such that it's basically like the countercyclical capital buffer is already turned on, and that he would like the ability to be able to turn it down in a downturn. I was wondering if you agreed with that. And then also, just quickly on real-time payments, larger banks have suggested that if the Fed built its own system, that would be a bait and switch because the Fed asked or called for a private sector system. Do you think that that is a fair assessment?
Okay, so on the first, I would say that I view the level of capital requirements and the level of capital in the system as being about right. I do agree with that. The idea that you're talking about is one that's that Vice Chair Quarles has talked about. It's one under consideration. The idea being, in a sense, we've chosen in the United States to have high through-the-cycle capital requirements by doubling the SIFI surcharge, which is the surcharge that the largest banks have in their capital requirements. We've, in effect, already put in place substantial countercyclical buffers. And so conceptually, you can think of I'm not saying it's the same thing as a countercyclical capital buffer. So that's really the point, is that we don't rely, our system doesn't rely on our ability, doesn't mainly rely on our ability to identify the right time in the cycle to trigger a countercyclical tool. We rely on through the cycle, always on high capital and liquidity requirements. And I think that's a good thing to do. The idea of putting it in place so you can cut it, that's something some other jurisdictions have done, and it's worth considering. I think the United Kingdom in particular has a countercyclical capital buffer that's always on, but that the one point of it is that you can cut when there's a downturn and therefore give the banks more room. So this isn't something we've decided to do. It's just under consideration. In terms of the real-time payment system, your second question, so this is something the United States is far behind other countries in terms of having real-time payments available to the general public. The Fed, really coming out of the reserve system, the reserve banks and the board together convened all of the stakeholders around the table to talk about how we could move forward. This is consumer groups, technology companies, banks, card companies, pretty much all of the groups who would be interested, and worked on a project for several years. And one of the things that came out of that was a recommendation that the Fed should build a 24/7 by 365 real-time settlement system to solve that problem, to address that problem. We put out a proposal in October of last year about, should we do this? And we got quite a lot of comments. They were overwhelmingly favorable. And I would point out that in our payment system, in many places, the Fed operates alongside private sector operators, for example, in wholesale payments, in ACH and in check. So it wouldn't be unusual or out of keeping with how we've done things in the past.